Today is Thursday, November 9, 2023. 0 of 11 sectors closed green. Communication services led, and healthcare lagged. The Treasury market experienced a hiccup after Industrial and Commercial Bank of China was hit by a ransomware attack that disrupted its ability to settle trades on behalf of other players. Meanwhile, bonds and stocks took a leg lower after Federal Reserve Chairman Jerome Powell stated, "We are not confident that we have achieved such a stance," when speaking about monetary policy and the path to 2% inflation. AMC Entertainment fell 14% after offsetting decent earnings with plans to sell an additional $350 million in stock. It's using the cash to bolster its liquidity, service its existing debt, and for general corporate purposes. Crypto had another volatile session, with Ethereum catching a bit on news that BlackRock took its first step toward filing for a spot Ethereum ETF. It's anticipated that once a spot Bitcoin ETF is approved, there will be a wave of approvals for spot crypto products. Astrospace, which came public via special purpose acquisition company SPAC in early 2021. At the time, the company raised $500 million in cash at a $4.1 billion valuation. Hoping to achieve its goal of cheaply and rapidly producing small rockets, the company had reached orbit twice successfully, but failed 3 times after going public. That, combined with other operational issues and a floundering stock market, sent its shares on a clear downward trajectory. In the context of that massive decline, the stock was back in the news today on news that it will be taken private by its founders at a roughly $30 million valuation. Speaking of lackluster space stocks, Virgin Galactic was back on traders' radars. The company enjoyed a 20% pop today after announcing plans for cost savings. It will pause spaceflight operations next year to focus resources on developing its next-generation Delta-class spacecraft, also cutting 18% of its workforce as part of the strategic reorganization of resources. Aurora Cannabis reported second quarter adjusted EBITDA of $3.4 million on revenues of $63.40 million. Revenue rose 30.3% year-over-year, primarily due to its growth in its global medical cannabis business and plant propagation. Its net loss from operations narrowed to nearly break-even, up from a $45.5 million loss last year. ACB shares jumped 12% on the news. Meanwhile, Canopy Growth reported a narrower-than-expected adjusted loss of $11.9 million. That's well below last year's $56.4 million, which caused the company to experience liquidity issues. Since then, it's taken drastic steps to push towards profitability, including job cuts, exits from several international markets, store closures, and divesting its Canadian retail business. CGC shares fell 10% today, as investors worry it won't have enough runway to turn its business around in a challenging operational environment. Like other industries plagued by slow growth, many of its companies are focused on cost-cutting as they await a catalyst to spur demand. Investors had hoped the Department of Health and Human Services (HHS) recommending easing restrictions on marijuana 2 months ago would help drive federal legalization. But, as with anything related to the government, that process will likely take many quarters, if not years. As a result, the initial sharp reaction higher in the sector faded just as quickly, with most ETFs that track the space approaching new all-time lows. The structural issues continue, leaving this highly fragmented industry in survival mode as it awaits the structural changes needed to thrive. Unity, which was recently in the news for pissing off literally everyone with its new pricing model. Shortly after that announcement, the backlash caused it to quickly change its plans and replace its CEO with former Red Hat CEO Jim Whitehurst. Today's messaging did little to quell investors' anxiety. The company's 32 cents per share loss on revenues of $544.2 million missed expectations. Its executive team said they did not expect the introduction of new fees to be easy, that now see the change having minimal benefit until ramping in 2025. Management has struggled to determine how best to charge clients for its products but said they will implement a new plan this quarter. They noted that this may involve discontinuation, layoffs, and reduced office space. It appears the company is still figuring out all the details. as it declined to guide for the current quarter. Nonetheless, significant changes are coming and should be finished by the end of the first quarter of 2024. $U shares fell another 12% after the bell, sitting at all-time lows. Next up, the marketing automation company Trade Desk is also taking a beating after hours. The company's adjusted earnings per share of 0.33 and revenues of $493 million topped expectations of 29 cents and $487.04 million. However, its revenue guidance for the current quarter came in about $30 million below analyst estimates of $610 million. Executives blame transitory cautiousness from advertisers in specific industries, such as U.S. automobiles and media entertainment, which are dealing with labor strikes. While spending stabilized in the first week of November, the weakness in October will weigh on this quarter's results. Overall, it remains an uncertain advertising environment, with some companies faring better than others. Given the volatility in economic data and Fed policy expectations, many companies are cautiously approaching 2024. Despite the rest of the report being essentially in line with expectations, investors are honing in on the weak revenue guidance. TTD shares fell 30% after hours, probing the low end of their multi-year trading range. Popular video chat service Omegle shuts down. The online platform that allowed individuals to connect and talk with strangers has shut down after more than 14 years, citing growing misuse of the platform. It was founded in 2009 by an 18-year-old programmer and high school student who bootstrapped it into popularity. As of last month, it still pulled in about 50 million visitors, but has decided to shut down after becoming a breeding ground for many sketchy activities. Its founder expressed disappointment in how much the internet has changed. MGM Resorts averts Las Vegas workers' strike with historic deal. The unions representing hospitality workers in Las Vegas reached a tentative deal with the casino giant less than 24 hours before a strike threatened to shut down the Strip. More than 25,000 workers have a new 5-year tentative agreement with MGM, just days after rival Caesars Entertainment reached a deal with 10,000 workers. The Las Vegas Strip has also recently struggled with several cyber attacks, so investors were glad to see one more operational hurdle cleared. Dismiss privacy lawsuit means your car can keep collecting your data. A federal judge upheld the dismissal of a class action lawsuit that alleged automakers unlawfully collected and recorded car owners' text messages. The Seattle-based judge said the claims aren't severe enough to be considered a violation of the state's Washington Privacy Act WPA. As automakers continue to build out their infotainment systems, privacy advocates argue that manufacturers aren't doing enough to protect user data. For now, the law doesn't see it that way. OpenAI blames DDoS attack for chat outage. The company confirmed that a distributed denial-of-service DOS attack is behind periodic outages affecting chat and its developer tools. Many users attempting to access the service are either receiving a message that chat is at capacity right now, while others are entirely unable to log into the service. The usage of its new features is far outpacing expectations, so it'll need to stagger access in the short term to limit the load on its systems. Apple suffers setback in battle against $14 billion EU tax bill. An advisor to Europe's top court said that the European Tribunal ruling favoring the tech giant in a $14 billion tax dispute made legal errors and that the case should be reviewed again. The issue relates to 2 Irish tax rulings that allowed Apple to artificially reduce its tax burden to as low as 0.05% for over 2 decades. While this opinion doesn't change the verdict, it brings the issue back to light and raises the odds of the court revisiting it.